Good evening. This is the Elliott Wave update for the NASDAQ 100 for Tuesday, June 21st, 2022. It actually was, even though we were higher, we were solidly higher. It really felt like an inside day. There was an absence of traders, in my opinion, today. Plenty of buyers present. Sellers were there when needed. But the tone was definitely, we're attempting to take it higher. And it almost felt as that everybody was kind of standing around. And if you had a phone call, you kind of, I don't know why they're holding it up, because the overall picture has not changed. There's no evidence of anything other than what we already know. What does change a little bit in the NASDAQ is that some of the focus has switched over and it is now on Google. As Google's up next to do the 20-for-1 split, and I believe it's due in July. I'd have to double check that, but I think it is in July. And so part of that buildup, maybe getting back into Google for the split, don't know. In any case, when I took a look at, and I'll do it for you guys too, and I go here and I just take a peek, let's do the latest. This is today. And basically what we have is Apple, Microsoft, Amazon, Google. Let's take it down to Google. Google's 4 and 6 because it has the 2. But just before Facebook got its nose handed to it, they kind of, Facebook and NVIDIA basically cancel each other out. So I took it down to here. And if we add this together, out of the 280 points, 3.30%, 2.5% goes to Microsoft, 3.3% goes to Apple. And you add this up, Google alone had, had over 8%, was responsible for 8% of 280 points by itself. Tesla was almost 10% by itself. Adding the balance in, and you're getting a large part of what the market did today was what took place in 6, actually 5 companies, 5 components. Google gets added twice. But there you have it. So that's a lot. It's definitively a lot of that. And so what we look at, or what I look at, is like all of that gets translated into here. How much more now becomes the question. So let's take a look. Because my outside count, let me go back. The outside count of what I'm saying is that it remains the same, but so do both. So all that I'm talking about that it's either a 5, a minor 5 down, or it's part of going to be a much larger minor 3rd down, with this being minor 1, this being minor 2. That's still viable and still there. Does it fit overall? It can, because what it's saying is what's coming in front of us, which I don't know, but we can line up a lot of things that would point to it happening, that we could tumble off, according to this other parallel count that remains active. So the one I'm using is the one that is basically saying that the market is getting ready to put in a near term to short term low and put in a primary A wave. And that would suggest that we're going to get a primary B wave advance. Now that's out there. We still need to go down. That part hasn't happened yet. I'm just saying what could come. So it could be a near-term bottom. And that bottom could be at 10,500. So we still could drop 1,000 points from here. No problem. And it could happen very quickly. No problem. 5th wave, boom, slam, dunk, done. Then, because again, I'm still looking for that V. Now go down to that hourly chart. As the announcement that, hey, we're done. That does not, it looks like a big V, a wide V. It doesn't look like a V. A V is going to look like boom. a V, a tight V, not this loose thing here. Now, we did get up to the hourly 200. We did break above it. We did fail. We went up and tested it, and it failed. We went up again, and it failed. So it continues to go up and test and fail. So we're getting kind of this little bit of a pennant. Maybe there's one more little gasp to the upside, and that will get us back out to that resistance zone, which is going to be, I got taken away. I believe it is at 17,800. I'll go back down to the hourly chart. I could throw it up. If we get a C wave to push, yeah. Oh, I could do this. Undo, remove. There we go. How about that? 17,760. 11,760. Whew. Been a long day. In any case, I can count this as an A, a B, and this is 1 of C, 2 of C, 3 of C. Actually, either that or 1, 2, and then a 1, 2, 3, 4, 5 of 3, and then a 4, and then we get a 5. It ends up here. We get one more. Gotta have Google, gotta have Apple, gotta haves. Get one more of those coming in, and then we get a turn. So ultimately, I am continuing to look for the market to turn and put one more leg down. And that would be at a minimum, at least one more leg down before we move into a little bit bigger, a little bit longer, more sustainable bounce with more participation. So this was very limited. This was a couple of stocks. We need to see it more broad-based. And you'd have to think that it was more broad-based in the Dow, but the Dow's 30 stocks. The broader than the Dow Composite, I believe, is upwards over 3,000. I may be wrong on that. The NASDAQ is 100. And the Russell 2000. There you go. So what has been participating has been thin. We don't have tremendous volume. 650,000, that's from Sunday. Sunday's Globex to today's close. 647. So it's 2 full Globex sessions plus our full session. So there you have it. Not a whole lot of volume, either propping it up or getting it up. So I feel not 100% confident because the market can always do what the market chooses to do, but I feel that we do have additional rally, gets here, and we decline. Again, we'll get confirmation because it will again break above that 200. The second time, we will have followers. And if it breaks then again above the 11,678 level, which is the current sequence high, or even if I'm going to put an internal 3 of this C wave high, it needs to break it and tell me that it's now in that 5th and it's now going to reach the next level. And that next level points us up at 11,750, I'm going to call it, to 60. I honestly don't think that in confronting what we're confronting in terms of interest rates, inflation, recession, et cetera, et cetera, et cetera, et cetera, to continue to buy it up, you got to have a very specific reason. Right now, it's like, oh, Google's going to split 20-1. That's a good deal. I think I'll jump. I'll take some. Whether you're buying 1 share, 10 shares, 1,000 shares, 100,000 shares, there's a lot transacting in Google, and it will really come in once it's split. There'll be a lot of trading in the stock, as evidenced we've seen in Amazon. And so the volatility in Amazon within the options, when the stock's up 2.5 or 3 or 4 or $5, which I believe it was today, that's equivalent of 100 or more points. So it's like Google going up over 100 points today. It really pushed the NASDAQ. That'll calm down. So we'll see more clearly that the market is not being broadly bought. It's very specific and for very specific reasons. So is it bullish? No. Can we have higher prices? Yes. Do I expect it just to continue? No. And I do expect it to turn. I do expect to see a new low under 11,068, which is the current down there, and to go from there much lower, 10,500 in that area. And I can put that on there. But please remember, we're not done with the upside. So downside is not necessarily, we're going to just do extensions for wave 5. And wave 5 is related to wave 3. So first I put in 3, and I'm going to put it in 5. It's not absolute perfect, but I'm talking for a long time. So 5 would equal 3 at 10,197. 10,005, yeah, it makes total sense. It's right in between. But it can come down to 10,2, 11,2, 10,7, 10,8, 10,800. That would also work. As long as I can count 5. Again, this is a daily chart. On the hourly, I want to count 5 down, clean, 5 clean. And if it gets down to 10,800 or 10,500, that's the zone. Max is like, I think we can drop here and still, find our way to put in a V. That's what I'm looking for. That's going to be the signal. We're done. We're now going to go back up in a B wave, but we're still going to go up. Remember, we're going to start trading the price action. And I understand it's like I did get a lot of comments regarding the daily, the weekly 200. And I use Thinkorswim right now, and the Thinkorswim, they have what they call the legacy, but they do tell you why, and I included that in my responses on YouTube. So if you have a question, check it out. It is due to the TOS platform, but I have used them for a long time, and so I respect the break. When it breaks, what I'm looking for is an acceleration. In whatever direction that break is happening, I look for an acceleration if the break is lack of a better word, sincere. In other words, it's real. And I got that, which is why I talked about it yesterday in the S&P and in the NASDAQ. So as long as that continues to be, I'm going to use these, but I would be more than happy to share how TOS came up with it, how Thinkorswim came up with that particular calculation. Okay, so for tomorrow, we continue to need to allow for the rally to push one more time. Now, what would change that? It comes down and breaks here. So it's not all that much. 11,420. If it breaks, I'm going to say that this completed our minute 4, and we're dropping in that minute 5th wave. Okay, so what we're finishing, we're going to finish the minute 4th, which has the potential to get up to 11,760, 50 to 60, all in here. Then we have additional resistance at 11,775. So we got it coming up, and I believe that that should contain any follow through, but we may get one more day. And if it stays thin, or sellers are like, yeah, because they're going to even look for better prices now. So remember, everybody searches for value. So it's where you can get your orders filled. On the downside, again, a break below 11,420, I'm going to give it two points there, would start to suggest we're done and we're now breaking down. Because in essence, if this is A, B, and this is 1 of C, 2 of C, 3 of C, 4 of C cannot overlap 1. And that's where I put the 1. Okay, I am going to leave it there. And our next update will be on Wednesday, June 22nd.